Today's video will be on the review of the December contract for micro and mini NASDAQ. I'll be going over October 7th's price action. So we'll start by outlining some of these daily PD arrays we have. I'll only be looking at Monday's premium wick, and I'll be grading that with the quadrant levels. And the reason that I'm going to be ignoring these two are because of how we traded through it already. I mean, we already have 2 wicks right here, and we traded all the way through it, closed high, and we'll see how we trade through it on this day. I wouldn't say that you need to completely disqualify that. Just me personally, I wouldn't be looking at this wick because I have this one, and then I'll just be using PD arrays from inside of here. Now we can break it down to a 4-hour chart. And we have Tuesday's price action right there. So this is what we would be observing. Sunday, all of Monday's price action, all the way up to 6 p.m. right here. So what do I have in this range to say one way or another I should look at this? We do have this wick right here, and we also have the daily wick that's inside of that. The PD array that I'm gonna pick is gonna be this. I'm gonna make that white so we can tell the difference. So the expectation would be if we just saw an expansion to the upside 10 a.m., then we close lower 2 p.m., and then the next open would be 6 p.m., right? It's pretty obvious. So that would lead me to believe we would want to see how we would react to this. Kind of gives it away, but you can kind of see a little bit. So leading us up into Asia is where I'll start really sit down like I am right now for this review, and I'll go over what we did the previous day, what's likely to happen probability wise, what are the key levels. So we do have this low, where we made a low on Monday, and then we made this high. So considering weekly profiles, I either want to see if we can shoot for a Tuesday high of the week or a Tuesday low of the week. Primarily, I'd be focusing on a Tuesday high of the week scenario just because of all-time highs, and then the way that we took out this liquidity right here, that was expected, and then we start to top out, make a breaker scenario, and then even on a larger scale, we have another breaker scenario. So I want to see if we do wick up here or come up here, if we can just sweep the high and come down, or if we would want to come down first and then, revisit later in the week. And that would give me a cleaner direction on the weekly bias, apart from what I would already have derived from looking on Sunday. So back to the 1-hour chart. Let's see if we can find any PD arrays that were formed. We have this 3 p.m. fair value gap. And this is all going to be to frame out London first. I usually don't trade an Asia session, only because it's usually compressed. And if it's not compressed, the runs aren't usually as sustained or as volatile. Now, there are days that we've seen in the past where Asia has run like 600 ticks, 400 ticks, 500 ticks. Like, you can see that, but that's not what I bank on. You see 292, 312, 192. Like, those are all good moves if you can grab the entire range. But if you're only grabbing a third or a half of that, then what you're grabbing 100 ticks, 150. So it's like, if that's what you shoot for, and that is defined by you, of course, then that's amazing. But for me, I go for a little larger of a range. I usually shoot for anywhere between 200 to 300 on average, and on light days I would take a 150. Anyways, let's continue. So we also have this, right? So that's something that I would want to see how we work off. So that's when I want to see something that we're working off of, I'll usually put a fib on that. And I'll make this pink. I'll make this pink as well. So these are our hourlies. And we have our 4 hour right here. So now I'll bust down to the 15-minute chart. And you know, we do have a lot of lines. I'm actually going to turn down the opacity on some of these because kind of bright. So when I get into Asia session, now we can, and then usually I already have a lot of my daily levels arrived or derived. It doesn't take very long. As you see now, it only takes a couple minutes to get those levels. So when we arrive in Asia session, I usually get up around 12 a.m., 1 a.m. So this is usually what I'm seeing, right? The only thing I focus on is before we get to Asia, is what we did after New York session. Now we know New York session ends 10:11, London close, right? Now what I have for here is 10:45, but once you break it down, it's 11. So what I'll be looking for is this, and then up until the 6 p.m. open. And then I'll evaluate what we did after we opened up at 6 p.m. So we see we have this nice sell-side market maker curve, right? We have the reaccumulation, the second stage distribution, smart money reversal. And then we start to break down, come back into inefficiency, and then keep going lower. So that leaves us with, from this range to this range, basically, we do have this balanced price range right here. We have this fair value gap and this fair value gap that was left open. So those will also be levels that I'm looking at inside of this 1 hour fair value gap. So I'll turn this down for just 1 second. But you can also, actually I'll take that out first. So what we can see is, we can see how this wick right here, this fib level, how this is graded. Look at how these levels are respecting. 7.5, the low. Look how the bodies respect 7.5, 0.5. Let me slide over just a little bit. Basically 0.5, you know, so it's pretty good. So that's something I'll use. So I'll see this, I'll see how we interacted with this. Okay, so we use this as kind of like a barrier. You don't want to go any lower from here. So what do we need to pull back to? Inefficiencies or highs? Where are they at? We have this right here. This is what we did after 6 p.m. So this is going to be something I want to grade as well. Let's see how we use it. Then we also have this high, and then we have these fair value gaps. So it would make sense for us to be pulling up in London based off what we did after New York session. It wasn't compression, so we had expansions. And then we have compression in Asia. So usually if we're going to see an expansion to the downside, we'll see some form of manipulation to the upside to handle unfinished business. This high, or this fair value gap, or this fair value gap. Possibly this higher one too. And notice how the 0.5 levels of this daily wick kind of aligns perfectly with the high of this 1 hour fair value gap. These are things that I'll note, and then I'll look for them when we arrive to them in price. And if we do, I'll look for those to be sensitive levels. Even like I was explaining to one of the members in our Discord that me and my partner AD have, I was explaining to him how we trade off higher time frame PD arrays can get us confused. And I won't go into that now, but basically what I was telling him is, when we trade higher time frame PD arrays, they're prevalent because of the sensitivity that price finds once it reaches that level. Even if we aren't going to continue or use that level in the direction that we're trading, it can still be used as a sensitive level and get you a good amount of, good range to get you paid. But going back to the chart, so this is also that hourly wick that I have outlined when I have it dialed down. So that leads us into what to expect for Asia, though. So typically what I'll do is, I'll try to use Asia session to project levels higher. So what I'll do is I'll go from here to here, and I'll use projection levels. And we have 1.618. Look how perfectly that lines up. I mean, that's really nice. And that's how I'll gauge my high for London session. And then from there, we move into New York, where we see this right here. And this is where I'll move into if-then statements. So if we're going to expand at New York, right, we don't have much manipulation at 7 a.m., then I'll expect 10 a.m. to be compressed. 9:30 to 10 a.m. to be compressed, and then loosen up around 11. So what that means is once we go down to the 5-minute chart, you can kind of see how that is a little more clear. And right here, when you can see where patience is a very, very good virtue for you to have. We see 9:20 really compressed, 9:25 really compressed. 9:30 has a bunch of manipulation. And mind you, this is a 5-minute chart. The 9:35, 9:40. So look at how compressed this is. And then the first time we actually have a candle, a body, is 9:55, 10 a.m. 10:05 we retrace. 10:10, the end of the macro, we pull a signature and we hit the 0.5 of this wick. Now, why did I choose this wick over this one, this one, this one? I chose this wick specifically for it being the longest and it being the highest. So it's not too much subjectivity in that. I mean, you could say this one is longer, but this one is again higher. And even then, you could measure this fair value gap if you didn't want to subscribe to using wicks. And I usually use a 3/4 retracement. You see how it lines up just the exact same, if not even better. And then we see obviously how this transpires. We blow through this. So you see here how you can see it's kind of used the 0.5 level and then the 0.75 level to keep going higher, and then it uses the high of that 1 hour to keep going higher once we open at 7 a.m. Now, what do I say when I see something like this? I'll say, okay, this is expansion. That means we should see a reversal of the trend. So if we're going up and we break through this, I'm thinking we're going to keep going lower. Why is that? Because if we had enough strength to blow past this and it found no sensitivity at this level, that tells me that this is no longer going to be used as support. And that's when I would just delete it. Now, I'll be looking at this. This is derived from the daily chart, I believe. Or the 4-hour. My apologies. Yeah, 4-hour fair value gap. So we have that pretty good. And then this is October 7th. Yeah. So we see expand through. And then what do we see? This gets extremely choppy. So what does that indicate for what we see going forward? Now I see we reached the low at 1150 into that new week opening gap. This is purging the low of the week opening right here. So we have the Sunday's opening price, and then we purge that low, fill that gap, and we come back up. We compress like crazy. And then what do we have? Once we come into 7 p.m., and we open in Asia, price gets really fluid, and then we find relative equal lows right here, and then we find it sweep right back up. Now what I want to see is if we're going to expand and use this level right here as inversion, or maybe even this level up to this right here, or are we going to consolidate in this range? And if we consolidate in this range, then I'll expect the Asia high, the Asia low to be used to continue. In this scenario, I kind of want to see the Asia high get used to continue upwards, and then I'll measure that, see where it lines up. Hopefully it would line up with one of these levels. That would give me a higher level of conviction and probability in that long. And then from there, I'd be expecting New York to come down a little lower. Now, something I didn't mention that was very prevalent today is the opening range gap from Friday to Monday. So well as this one. This one's really nice too. That's already been filled. So if we slide this up, if we open up here and we close right here, so we damn near filled that in, and now what I'll do is I throw in the quadrant levels. Now these are something that I would like to look at. This was a big deciding factor in my bias for today on going short, was to see this get filled, because this is monstrous. So I wanted to see if that could get filled. You know, ICT mentioned the last Thursday's opening range gap, but we see right here how this was almost perfectly nailed on the 5 minute. When you zoom in more, you can see it wasn't quite hit, but almost. But I appreciate your time tonight or today, whenever you're watching, and that'll conclude the review for October 7th on the December contract for micro and mini NASDAQ.